Hello and a warm welcome. You've joined us on Market Fatafat right here on ET Now. I'm Ashesha Adhwaryu, with me is Sharad Dubey, and this is a show where we take you through all the stocks that are buzzing in trade today. But before we get started, Sharad, turning out to be a good day for the Indian markets again, isn't it?
Well, yes, it is a range-bound market, but on the positive side. And Ashesha, yes, the bulls and bears, the advanced decline ratio is in the favor of bulls. Nifty around the range of around 24,800 plus, but still on the green side. Nifty Bank also not much wider movement coming in either of the indices, and it is a range-bound market. It's also flattish, slight shade of red coming in, and largely most of the sectoral indices are also in a range bound. Of course, earnings impact is something which we are seeing. Avenue Supermarts, a big jump coming in after the management commentary coming in the con call itself. But realty and auto index, that has actually taken a beating. Auto stocks also under pressure ahead of their sales numbers, which are expected to come in the next 2 odd days as well. But stock specific, Ashesha, this is largely on the earnings side as well. And moving on, we are joined by Nilesh Jain, the head of derivatives at technical research at Centrum Broking, and also from our research team, Kanishka has joined from our Delhi studios as well. First question is for Nilesh. How is the market actually panning out? Is there a buy on dip strategy coming in, or should someone stay away from it? Because a lot of global cues are coming in. We are expecting FMC meet takeaways from tomorrow morning itself. The impact would be there. The August 1 trade deadline is there. Big tech earnings, and also earnings in India as well. So how are you looking at the entire positions when it comes to Nifty and Nifty Bank?
Very good afternoon to you. Good afternoon, everyone. Absolutely. So there are multiple events lined up, and another important event that is scheduled tomorrow, that's Nifty Bank, Nifty FN expiry, monthly FN expiry, I would say. So ahead of that, we are expecting market to remain slightly volatile. As we have already seen in last couple of trading sessions, a bit of volatility is already there in the market. And after yesterday's strong pullback move that we have seen in the Nifty Bank Nifty indices, where a strong pullback was seen, and Nifty Bank Nifty both have formed a big bullish candle on daily time frame chart. So looking at the overall setup, looks like from a very short-term perspective, there could be possibility of a further pullback to continue on the back of short covering. As far as Nifty is concerned, 24,950, 25,000 kind of levels can be seen. But I would still rather wait for a decisive breakout above 25,000 to call it as a short-term bottom or short-term strong reversal indication. But for that, it is important for the Nifty to take out 25,000 level. There's not only a psychological barrier, but also a 50-day moving average resistance also coming exactly at the same level. So a breakout about 25,000 will provide more comfort. But as of now, it is a market where one should focus on stocks and sector specific move. On index front, as mentioned, we have expiry, so there could be possibility of market to remain extremely volatile. So better to stay away from trading in the indices. But yes, stocks and sector specific is something that one should keep an eye on.
Okay, and 25,000, that will be the important level to watch out for on the upside, and after that we could see some kind of decisive moves. That's the word coming in, but stock specific, and we'll focus exactly on that. And shifting focus first to Tata Motors, then big moves coming in for this counter. In fact, Tata Motors is sitting with a cut of nearly 3.5% in today's trade. And Economic Times has reported, citing sources, that Iveco Group is near to selling its commercial trucking business to Tata Motors. Now, this is an Economic Times report, and they've cited sources where Tata Motors is set to acquire this particular stake from Magneti family. The deal is likely to be announced soon, and the deal involves Tata buying Exer's stake and launching a tender offer for remaining stake for this particular deal that is likely to take place. In fact, Iveco has also confirmed these talks, because of which we saw that move come in as far as Tata Motors are concerned. Now let's also discuss why Tata Motors is in red. This is likely to be a negative for Tata Motors margins because Iveco is present in Latin America, North America, Africa, Asia, and they currently generate margins in the range of 5 to 6%, and Tata Motors margins are in the range of 9 to 10%. So if at all this transaction were to go through, it could perhaps impact margins for Tata Motors, and that is precisely the reason the stock is sitting with a cut of nearly 3.5% as we speak.
Yes, very interesting take, Ashesha, on why Tata Motors stock is actually down on the back of the acquisition news flow. But moving on, the fertilizer space is also buzzing in the agrochemical space. We're seeing buying with the good numbers coming in, and looking at Coromandel. Nilesh, this looks like a sustained up move coming in when it comes to these players, and entire basket there is a buzz happening. But what's your view on Coromandel? Will we see more positional up moves coming in?
Absolutely. So Coromandel International, this particular stock has been in a very strong uptrend on month basis. If you see, the counter has witnessed a strong uptrend. Now, given the kind of consolidation that we have seen in last couple of months, I would say from May till date, we have seen a bit of consolidation. Today, it has given a decisive breakout, and on the back of that, we are expecting a strong momentum to continue towards 2700 on immediate basis, followed by 2850 to 3000 kind of levels can also be seen on the upside. So it's a buy on decline. Keep a stop loss below 2500, and as mentioned, from a short to medium term perspective, 28 to 3000 kind of levels can be seen in Coromandel.
Well, yeah, it's a buy on decline when it's for Coromandel, and stop loss is coming in at 2500 rupees. But let's look at the defense space. The defense space has been buzzing in trade, and yesterday, post-market hours, in the PM, Modi has lauded the defense push of India, and over the last 11 years, the entire production has gone up by almost 3 times, and India itself exports defense equipments to more than 100 odd nations. Positive commentary coming from the government when it comes to the defense exports, but of course over the last 2 to 3 odd months there was a consolidation happening. In some places even corrections were there, and the day's trade we have picked out 2 stocks which would be in focus. HAL is on the positive side, while Bharat Electronics, some selling is actually happening post its earnings as well, but largely defense stocks in focus as the commentary has come from PM Modi when it comes to the overall greatness of the sector.
Okay, so that's the view coming in on a whole host of these defense stocks which continue to remain in focus today. But let's put the spotlight now on the biggest gainer on the Nifty 50 index, and that is L&T. The stock is up nearly 4.5% today. Kanishka, the numbers were good, but what do brokerage houses have to say on this now?
That's right. So it's the top Nifty gainer today, and like you said, the numbers were a solid quarter when it comes to Q1. Revenue and EBITDA, they were broadly in line with estimates, while the net profit that actually beat the 18-hour poll. Revenue rose about 15.5% on a year-on-year basis. Profit, that surged nearly 30%. Margins, however, softened slightly to 9.9%. Order inflow was the key focus, that jumped to 94,453 crore rupees, over half of this coming from exports. Now let's take a look at what brokerages are saying. Most of them are actually upbeat. Motilal Oswal maintains a buy with a raised target price of 4,200, citing strong order wins, execution, and a potential 15 lakh crore pipeline. Now it has also highlighted the company's ramp up in international markets and green energy. Next up, there's Nuvama, which has also retained a buy call, hiking the target price to 4,200. This one as well. It notes sharp execution in energy and high-tech segments and expects 15% revenue growth, which is in line with the company's guidance. Now, a key commentary that's come from the management is that private capex has started to come back both globally and locally. So, all in all, a very solid quarter coming in for L&T. And that's how the numbers are looking, and the brokerages seem very positive.
Well, the street has given a thumbs up to L&T as pointed out by Kanishka. But Nilesh, another stock coming from the agri space, but this stock has been a roll. From March lows of 750, stock has climbed up more than 1200 levels, and also it's creating a really good chart patterns of higher highs. If you look at it on a weekly basis also. Nilesh, expiry, what are your views? Will we see some sustaining growth coming in, or there should be some profit booking at this levels?
Again, another very strong setup can be seen in this particular counter, that's EID Perry. So looking at the recent momentum that we have seen, the counter has been in a very strong uptrend. It is trading in uncharted territory at all-time high. Today as well, it has hit another record high. So given this kind of a strong momentum, we are expecting further follow-up move to continue on the upside towards 1300 to 1400. And it can be bought, but the idea should be that it can be bought in multiple tranches or buy on decline. That should be the strategy, because the stock has a very strong support at 1160. That should be the stop loss for the long position. Any dip towards 1200 to 1220, in that range it can be bought for upside target of 1300 to 1400.
Okay, so 1300 to 1400, those could the levels be that we could watch out for EID Parry. But we need to slip into a very short break. We'll discuss many more buzzers on the other side. Don't go anywhere. Welcome back. You're still tuned into Market Fatafat, a show where we discuss all the stocks that are buzzing in trade today. And let's now put the spotlight on GAIL, or Gas Authority of India. The stock is sitting with a cut of nearly 1.5% as we speak after it reported its numbers, and they were on the weaker side, and across all segments it is reported weak side. We have a whole host of brokerage houses. They've come out with their report. Antique, they're maintaining their hold rating with a target price of 185. In fact, they've also gone ahead and cut volume estimates for FY26 and 27 by as much as 4%. And they say that they believe that the street is overestimating pipeline value and trading's earnings scalability going forward. So brokerage houses clearly are not happy with the kind of results GAIL has reported. Avendus, meanwhile, has maintained its buy stance with a target price of 205. They say positive earnings outlook is driven by core transmission growth and steadier, more profitable marketing segment performance that the company reported. But they say margin weakness in petchem segment is perhaps fully priced in, and we will not see any upside as far as petchem margins are concerned. So they are maintaining their buy. 205 is their target price. Motilal Oswal has also gone ahead and lowered their target price to 210 from 215 earlier, and they are cutting their earnings estimates by 4 to 8%. So on the back of these brokerage notes that we have on the back of GAIL, the stock continues to remain in focus today.
Right, movement coming in GAIL and all the information coming in from Ashesha. Also looking at the pharma space, Sun Pharma is in focus. Nilesh, overall the charts positionally they really look good when it comes to the pharma names, and we have seen buying across the segments, and also defensive as a pack have shown interest in this markets of volatility. So what are the charts suggesting for Sun Pharma, Nilesh?
If you just pull up last 1 year chart, you can clearly see the stock has been in a very tight range, and it has witnessed a lot of consolidation in between. So as of now, it is still one of the underperformer within the pharma pack. But now looking at the recent development, looks like stock has bottomed out, and we can expect a strong momentum towards 1780 to 1800. Now 1800 again going to act as a very strong resistance zone. And a breakout above that will be considered as a broad structural breakdown, a breakout that will be from a symmetrical triangle pattern. But as of now, at present, the risk and reward looks favorable for the counter. For 1800 target, one can keep a stop loss below 1700, and it's a buy.
All right, important levels coming in for Sun Pharma from Nilesh. But moving on, JSW Steel is in focus. Positive news flow coming in. Supreme Court is expected to hear the Bhushan Power case review petition in the open court. Now, of course, this becomes a sigh of relief when it comes to the company. And overall, the company did open with a gap up opening, but there seems some moderation coming in the prices. The stock trading at around the 1030 odd levels. Also, interestingly, looking at the steel players, the demand still remains stable as the prices are also showing an up move. The global prices, of course, are coming in at almost 4-month high levels. So it will be very interesting to see the numbers, how they pan out for the Q1 numbers, especially the EBITDA numbers is something which we will be tracking for. But net currently the stock is still trading in the green.
Okay, so that's JSW Steel for you, up in trade today. But shifting focus to NTPC then, Kanishka, it reported its numbers and largely a mixed set, isn't it?
That's right. So largely mixed set of numbers coming in for NTPC. Revenue that was in line, that was down about 4.2% on a year-on-year basis. Net profit, meanwhile, that has surprised and beat estimates, rising almost 6%. But EBITDA, that fell 17.4% and margin slipped to 24.2%, down from 28% last year in the same period. Now, while top line and profit were steady, operating performance was weak due to margin pressure. Now, on the positive side, fuel costs, they dropped 10%. Coal PLF, that stood at 75%, and the total capacity that NTPC has surpassed 82,600 megawatts, so a few positives there as well. Meanwhile, the management has reaffirmed its focus on reliable power, efficiency, and green energy expansion. It is looking to invest in a lot of green projects in FY26. Meanwhile, if you look at the brokerage commentary, Nuvama has retained a neutral call with a raised target price of 401 rupees, citing strong ROE, 22 gigawatt of capex visibility and steady JV gains. But it has also flagged margin pressure as a key monitorable, and that's a risk that we need to be watching out for. So overall, a soft quarter with some structural positives coming in for NTPC.
let's call it a mixed quarter, Kanishka, and even the brokerages have given varying views, coming in some positive, some negative. But moving on, Grasim would be the next stock in focus. And Nilesh, what are the technical charts suggesting for Grasim? This counter has been off late, you could say, in a matter of consolidation, but news flows coming in from Asian Paints also, and they gave a commentary which was very important, is that one of the key players who have come in, their sales have stagnated. Might be an indirect jibe at the company. But Nilesh, Grasim, what are the charts looking like?
Right, so if you see across all cement stocks, we have seen a bit of a pullback move today. Specifically Grasim, it has witnessed a lot of correction in last 1 month. Now from the lower levels, we are witnessing a kind of a pullback, I would say, and this pullback is likely to extend further towards 2850 to 2900. So purely from a pullback perspective, from a better risk and reward perspective, Grasim is looking positive. One can keep a stop loss at 2700 and upside can be played towards 2850 to 2900.
Okay, so more firebrand coming in when it comes to Grasim India. But New India Assurance, the stock has given phenomenal returns today itself. Numbers are very strong. Operationally, let's just go one by one. Gross written premium jumping 13%, net earned premium also jumping 10% odd. And we see the stock nearing the 200 mark, 15% high. Inline set of numbers coming in, and the management itself stated that their market share has increased by almost more than 100 basis points as well. Interesting, the PAT number, if you look at it, that's up 80% on a year-on-year basis. Quarterly numbers also very strong, but they did mention that Air India flight incident was there, which impacted their underwriting results. But the street is awarding the growth. The PAT numbers which we are seeing, a health segment witnessed a slightly higher loss ratio going ahead, but nonetheless most of the portfolio and the other assets have performed well. The solvency ratio, it's an operational parameter which we look for general insurance companies, that has come in at stable at 1.87 times, and the focus for FY26 would be to increase the profitability and also launching innovative products in the retail and the MSME segment. So strong commentary also coming from the management as well.
Strong commentary for the management, and the stock is soaring in trade today, up nearly 15% as we speak. But shifting focus to the aviation sector then, Interglobe Aviation, that will be reporting its numbers later today. Kanishka, what are the expectations?
Well, Indigo is expected to post a muted Q1 as per Bloomberg estimates, with revenue that's likely to rise about 7% on a year-on-year basis to 20,886 crore, while the net profit that may fall 17% to 2,262 crore rupees. Now, margins, meanwhile, they are also likely to be under pressure, with the EBITDA margin expected at the 28.7% level, down both on a year-on-year as well as sequential basis. Operationally, now ASK growth that is seen at 15%, but passenger load factor that may soften to 85%. RPKs, they are expected to rise 14% on a year-on-year basis, led by strong international expansion. That's a key watch this time for Indigo. Brokerages, however, have also highlighted some pressure on fares and yield mix, with May-June disruptions impacting the performance. However, low fuel CASK may offer some support. Long-term, as per brokerages, Indigo continues to gain ground, carrying 270 lakh passengers in Q1 with a 64% market share as per DDCA's latest data. Some key commentary that we'll be watching out for will be on engine grounding and competitive intensity in the market for Indigo. So overall, a muted quarter is what we're expecting from Indigo. And of course, the stock is also down, trading in the red as we speak.
All right, thanks Kanishka for this update. But for markets fatafat, this is enough. Also, there is a shortage of time as well. But thank you very much, Kanishka and Nilesh, for joining us in the show, and Ashesha as well. Now, importantly, the beginning of the month.